Hello, friends. Welcome to our next edition of weekly webinars. I am Shumoy, and today it is 28th of September 2018, Friday. We just had a close of we just had our weekly closing in Nifty, and incidentally, it was our monthly closing as well. So today we got both weekly and monthly closing. So charts will be interesting to see. And yeah, Nifty is pulling back as we were expecting a few weeks ago. Now, before we take today's market or what is happening, what is likely to happen going forward, let me check how the global equity and global commodity markets are performing. And this is the chart of US dollar index. As you can see, it is the daily chart, and the dollar index is actually doing nothing much, right? It is not doing something significant. It is in an intermediate downtrend, and prices are trading below its 50-day moving average. But chances are high that it has taken a support at 93.5 region, and going forward, dollar index is likely to go higher. Now, if dollar index is likely to go higher, then we can expect the commodities, those are denominated in dollar, to remain weak, and that is what exactly we are seeing in the chart of gold here. This is the daily chart of gold, as you can see, and gold has been pretty weak for past 4 or 5 months. Intermediate trend is down. Yesterday's closing was at $1,187 an ounce, and it is below its important moving averages. In fact, 50-day moving average for gold was actually working as a resistance for this commodity. Right now, the moving average of 50-day is posted at $1,210 an ounce region. So next spate of buying can be expected only if gold manages to go past that. That is, there is a resistance not only of the 50-day moving average, but also a triple top resistance at around 1210 to 1213 region. And if gold manages to go past that level, only then we will expect some short-term pullback in gold. Now, having said that, and what is likely to happen in crude oil? This is the daily chart of crude oil, and prices yesterday closed at $72 approximately, a little over $72. Now, the primary trend is up for crude oil. There is no doubt about it, and lots of speculative interests are playing out in the energies market. More importantly, we are having sanction on Iran going forward, and market is expecting some cut in supply, and that is what is driving crude going higher. But although the trend is up, and 200-day moving average, the slope of the 200-day moving average is upward, but somehow it is taking some resistance at around $73 to $74 region, and crossing over that resistance will be difficult for crude oil. For whatever reason, there are definitely lots of fundamental factors playing out. As far as the outlook in crude oil is concerned, we are not expecting the primary. No, well, the trend is upward, right? The primary trend is upward, but we are not expecting the primary trend to make a new breakout immediately, or at least in the near future. Maybe some pullback is of the order, and $74 will be acting as a resistance for crude oil. and some weakness is possible going forward, especially if it starts trading below $71 a barrel. So some pullback is possible, and we are giving a little bit short-term bearish outlook in crude oil. Now let's see how the US equity markets are panning out. This is the chart of S&P 500, which is the large cap index of the US market, and as you can see, charts are showing pretty clear uptrend. There is no doubt about that. In fact, Dow yesterday made its lifetime high, and also Japanese market made its lifetime high yesterday. And so the global trend is upward. There is not much doubt about it. Many factors playing out there. There is some confusion about interest rate, both in US and back home in India. In fact, next week we are having a credit policy of RBI. So lots of factors are playing out, but overall we have to follow the prices. We cannot fight with the trend. So the trend is upward in US markets, and weak dollar is will also help that cause. If dollar remains weak, then stocks will also show some strength. And we are not expecting some great pullback or meaningful trend reversal immediately going forward in US market. But things in India back home is quite different, right? Now let us open the chart of Nifty here. This is the daily chart of Nifty. You can see on my screen, and today it gave a weekly closing. Today it was also a monthly close for September. And the series of September ended yesterday, the future FNO series, and it ended with extreme weakness. In fact, the September series saw a 700 point of fall decline, and last time we saw this was back in February. So after 7 months, we saw a meaningful pullback, and the 200-day moving average right now is quoting at around 10,770 region. So we are expecting, and chances are pretty high, that prices will retrace at least to the 200-day moving average. So another minimum 150 points of fall are of the order. Minimum 150 to 200 points of fall are absolutely normal. Now below 200-day moving average, the primary bull market officially ends. But given the fact that we have seen such a strong bull market for past 3 years or 2.5 years, from 2016 February till 2018 August, some more pullback is likely to occur. Let's turn this into a weekly chart. This is the weekly chart. We saw consecutive 4 weeks of fall, and even that does not violate the previous bottom, which was at 10,720 region on weekly chart. The last bottom, unless the last bottom is broken out, taken out, we cannot say that the uptrend is broken. So officially the uptrend is still on, but the market is definitely weak. There is no doubt about that. Last week we saw a panic low in the market when Nifty sold off quite significantly on a rumor that an NBFC stock, which is Dewan Housing, was on the verge of a default, which actually turned out to be a rumor. So market actually recovered from that point. But today, Nifty actually broke that low, although it did not stay there. And towards the tad end of today's market, we saw some pullback here again. But these pullbacks are actually becoming more and more more and more weak. And this is the characteristic of weakness. Now going forward, we are expecting the weakness to remain. Many bad news are hitting the market every now and then. So for today, we saw another sell-off in PS Bank. Dewan Housing kept on coming down, and another stock. Many stocks are falling without any reason, and it is not even. It does not make sense to try to find out any logic behind those falls. Infobim, the case of Infobim, the stock fell 70%, over nearly 70% today. What can you say to that? So these are the characteristics of any intermediate bear markets, and yes, we can say we are at the beginning phase of a bear market. We saw a bull market for nearly 2.5 years. Now it's the time for bears. I'll be very surprised if the 200-day moving average actually survives next week. So, and also another important point is that prices are almost every day opening with a gap up. Someday it is a 40 points rise, someday it's a 30-point rise, even 50 or 60-point rise are operating there, but prices are not sustaining. All the gains are being forfeited within half an hour maximum, and then prices are trudging lower and lower. So that is also the characteristic of bear markets. So forget about indicators and oscillators, because the structure of the bull market has been hard, and this is exactly what I told you a few weeks ago. So the indicators and oscillators will now have to be examined in a new way, new light, and they will not behave as they behaved in the past 2.5 years. So right now we are expecting all rises will be opportunities to sell, and there will be supports, of course, at lower level, but the supports will ultimately not hold. The supports will be broken. And I am saying all this after we have seen some 800 points of fall from the top. So this is definitely going to be a decline of larger magnitude. The 200-day moving average, which is at 10,770 region, will be the final make or break region for the bulls, and after that we are not supposed to hold any long position in cash market. Now some stocks are still showing some strength. The question is whether we will go with them. Some stocks means the IT stocks, TCS, Infosys, Tech Mahindra. These IT stocks are basically they are driven by strength in dollar, right? Since their earning is in dollar, so if our rupee weakens and dollar gets stronger, so their earnings will also get stronger. So this is quite normal that the companies those earn in dollar will continue to remain strong. And this is exactly what is being seen in the chart of TCS. This is the daily chart of TCS, and there is definitely some strength. Looking at this chart, one cannot have any idea how the overall general market is taking a toll, because TCS is actually making higher bottom formation every now and then. It is right now trading at lifetime high. So TCS and Tech Mahindra and the likes of Infosys as well. This is the chart of Infosys. Lifetime high is at 740 region. It is today is closing. It is at 730 region, and the series of higher bottoms are clearly seen. So large cap IT stocks remain outperformer, and selective pharma stocks, we can say, is also likely to do well, because the likes of Sun Pharma, Ajanta Pharma, Aurobindo Pharma, their earning is also driven by dollars, and with weakness in rupee, they are also expected to show some strength. So those are the pockets of intermittent strength, but that does not mean the market will be defined by these stocks. No way. And FMCG is another sector that is likely to uh, at least they will put up a fight before going down. I'm not sure whether uh, the likes of Britannia, the likes of Hindustan Unilever, the large cap FMCG stocks. Dabur is to some extent weak, but also if we look at the chart of Dabur and we measure it from the top, the weakness is not much significant. So Dabur, Britannia, Hindustan Unilever are also likely to remain, or at least we can expect they will remain inert to the overall sell-off. But again, these 1 and 2 stocks in FMCG and IT stocks do not define the market. The market overall is likely to remain weak. Take the case of Yes Bank, right? Yes Bank also gave up another 10% today. And these are the stocks, those are already trading below their 50-day moving average, closed at 183 today. We do not know where the bottom is for the stocks like Yes Bank, Tata Motors, DVR, Dewan Housing. We do not know where the bottom is. Maybe the sell-off will continue for longer. So yeah, there is possible you may find the valuation cheap. You may find that stocks have declined so much from their all-time high, and why not try to do some bottom fishing? But I should tell you that buying cheap, if you want to buy something cheap, that is okay. We all try to buy cheap. There is nothing wrong with that. But do not buy in a downtrend, right? Stocks like Yes Bank, Tata Motors, TVR, or DHCL, Infibeam, these stocks are in a downtrend. So it is not okay to buy in a downtrend. So you have to avoid these stocks. If you have to buy, then pick up the stocks, pick up the sector. Those are relatively outperforming. And use strict stop loss, use strict risk management strategy. Because most of the stocks will give us shorting opportunities going forward, and money can be made from the short side. This view will be this bearish view will be more confirmed if prices actually take out the 200-day moving average, which is approximately at 10,770 region in cash nifty. So having said that, I'd like to sign off with a caution that you trade with stop loss. Days ahead are not going to be as good and as shining as it was 2.5 years. So trade with stop loss, do risk management, trade carefully, and let's meet up next week. Thank you and goodbye. And in case if you have any query, please ask me questions in our YouTube channel, and I'll be very happy to reply to your query. Thank you. Bye.